In a financial world increasingly driven by global trends, economic volatility, and geopolitical realignments, few things are generating as much interest in 2025 as the Vietnamese Dong exchange. Whether you're a first-time investor, a curious traveler, or someone watching the currency markets closely, the Dong's movement is something you can no longer afford to ignore. This isn't just another blip in the international financial radar, it's a shifting tide, and today, we're breaking down exactly what you must know in this crucial moment. The game is changing, and it's changing fast. As we enter the third quarter of 2025, the Vietnamese Dong is becoming a hot topic for investors across Asia, North America, and Europe. This renewed attention comes after several years of stable, yet closely watched performance, driven largely by Vietnam's aggressive push for economic modernization and strategic alignment with global financial standards. If you've been hearing the buzz, you're not alone. The real question is, why now? And what does it mean for someone just stepping into the world of currency exchange? Let's start with the fundamentals. The Dong, abbreviated as VND, has historically been one of the lower-valued currencies globally, with large numerical denominations that often confuse first-time exchangers. In 2025, however, the conversation isn't just about conversion rates or zeros on banknotes. It's about where the Dong is headed. Vietnam has been positioning itself as a regional manufacturing powerhouse, benefiting massively from shifts in global supply chains post-COVID and geopolitical tensions that have caused multinational corporations to diversify their production bases. With labor costs still favorable and infrastructure investment surging, Vietnam's economic engine is firing on more cylinders than ever before. That means the Dong, once seen as just a peripheral currency, is now at the center of a broader narrative about emerging market resilience and growth. But here's where things get more technical and, frankly, more urgent. Over the last 18 months, Vietnam's central bank has enacted a series of reforms aimed at stabilizing inflation and opening up the currency to more international transparency. From implementing stricter anti-money laundering protocols to enhancing cross-border digital transaction capabilities, the groundwork has been laid for a more globally integrated Dong. That's one of the key reasons we're seeing a growing number of platforms, including fintech apps and blockchain-based exchanges, start to list the VND alongside more traditional currencies like the euro, yen, or British pound. For beginners, this means increased accessibility, but also increased responsibility. You must understand the mechanics of how the Dong behaves in foreign exchange markets and what forces are likely to shape its path moving forward. One of those forces is interest rate policy. In 2025, Vietnam has maintained a relatively conservative interest rate to protect its domestic economy while attracting foreign capital. This balancing act has placed the Dong in a unique position. It's not being artificially suppressed, but it's also not being left entirely to market whim. This semi-managed approach makes it appealing to international investors seeking both stability and upside potential. But that doesn't mean it's risk-free. The Dong is still vulnerable to external shocks. Global oil prices, Chinese economic data, and U.S. Federal Reserve decisions all ripple through the Vietnamese economy in very real ways. For a beginner, this means keeping your eyes on the bigger picture. You're not just trading a currency, you're betting on a nation's trajectory. Another key development in 2025 is the increasing use of digital wallets and centralized digital currency bridges that allow near-instantaneous conversion of the Dong into other fiat currencies or even crypto assets. Vietnam has been quietly piloting its own central bank digital currency framework, and while full rollout remains speculative, the implications are enormous. A digitized Dong could revolutionize the way businesses and individuals conduct international trade, especially in border economies like Laos, Cambodia, and parts of southern China. For everyday users, it could mean faster, cheaper remittances, a big deal given how many overseas Vietnamese workers send money back home. If you're exchanging Dong this year, make sure you understand the platforms you're using. Not all exchanges are created equal, and the emergence of hybrid platforms, those that offer both fiat and crypto services, means you need to be discerning about liquidity, fees, and regulatory oversight. Speaking of regulations, Vietnam in 2025 is far more aligned with international financial compliance standards than it was even 5 years ago. That's great news for legitimacy and long-term confidence, but it also means stricter documentation and verification requirements when exchanging currency. Whether you're doing it in person at a bank or digitally through an app, expect tighter KYC, know your customer rules. For beginners, this can be jarring. You might be asked to provide additional ID, source of funds declarations, or even explain the purpose of the transaction. Don't let this intimidate you. These protocols are designed to protect the system and, indirectly, your own financial interests. But do take them seriously. Any inconsistencies can delay your exchange or raise red flags. And let's not forget tourism. As Vietnam continues to draw record-breaking numbers of visitors in 2025, the dong has become a staple currency for digital nomads, luxury tourists, and backpackers alike. If you're planning a trip and considering exchanging your home currency into dong, timing is everything. Exchange rates fluctuate throughout the day, and while the difference might seem small, it can add up quickly when you're exchanging larger amounts. Airport kiosks remain among the worst places to exchange money, often charging high fees with less favorable rates. Instead, look to reputable banks or pre-authorized digital exchanges that let you lock in rates before you even arrive. And always check if your home bank partners with a Vietnamese institution. It can make a big difference in fees and accessibility. What about long-term holding? That's a question more and more investors are asking as the dong's fundamentals continue to improve. While the Vietnamese government has not explicitly stated any intention to revalue the dong in the immediate term, rumors and speculation continue to circulate, especially in online investor forums and some alternative media channels. It's important to approach this topic with caution. Currency revaluations are rare and typically occur in response to significant structural changes or international agreements. In Vietnam's case, any substantial move would likely come only after continued economic expansion, further reduction in external debt, and stronger trade surpluses. As of now, holding dong as a speculative asset carries risk, but also the potential for reward if these macroeconomic improvements continue on their current trajectory. Another layer to consider is Vietnam's growing trade relationships, particularly its participation in multilateral free trade agreements like the CPTPP and RCEP. These agreements reduce barriers, improve standards, and boost trade volumes, all of which increase demand for the dong in the regional and global economy. As Vietnam's export numbers climb, so does the pressure on its currency to appreciate organically. That's why some analysts are predicting a slow but steady rise in the dong's value over the next few years. Not a sudden spike, but a gradual, confidence-driven strengthening. For someone looking to exchange dong today, this means your timing matters. Entering at a lower rate could position you well if appreciation unfolds as forecasted. Now, let's turn to security, a major concern for anyone exchanging currency in a digital world. Scammers are becoming more sophisticated, especially when it comes to lesser-known currencies like the dong. Fake exchange platforms, phishing apps, and identity theft are on the rise. In 2025, one of the golden rules is simple: always verify your platform. Look for licensing, regulatory approval, and third-party reviews. Avoid any service that promises guaranteed returns or insider information about a revaluation. These are classic red flags. Stick to known names or platforms recommended by financial institutions or major fintech players. And always enable two-factor authentication on your exchange account. It's a small step that can save you from a financial disaster. The final point we need to address today is the psychological aspect. For many beginners, currency exchange, especially involving a currency like the dong, can feel overwhelming. The high numerical values, the foreign financial landscape, the constant chatter of speculation, it all adds up. But remember this: the most successful players in this space are the ones who approach it with discipline, patience, and a willingness to learn. Don't chase rumors. Don't let fear or